Hey YouTube, this is Zach with Achilles Financial, and today we're going to be talking about SPY or SPY, and that is the S&P 500 ETF Trust. Now, this is a fund that tracks the total market performance of the S&P 500. This is a market-weighted index, which means that the larger market capitalization a stock has, the higher the weighting in the fund is going to be. This is, generally speaking, a great fund to invest in because it has a very low expense ratio. It has a dividend, and it provides exposure to a ton of different components of the stock market. If we head over to the portfolio component of the fund, you can see that in this stock allocation, you have access to cyclical materials such as basic materials, consumer cyclical, financial services, and real estate, defensive funds and consumer defensive, healthcare, utilities, and then you can see what they have classified as sensitive and communication services, energy, industrials, and technology. Now, this is something that has continued to grow, in particular the technology side, as you continue to see some incredibly strong growth from the largest companies in the United States. At this point in time, this stock or this fund is almost or just above flat on the year. That is primarily because you can see in the top stocks right here, they have had incredibly strong performances after a very weak 2022. This year, on a year-to-date return as of 6/2, you can see that Meta, also known as Facebook, and Nvidia are showing north of 100% returns. In particular, Nvidia is having some insane growth at $393 a share from their low at the beginning of January at $140 a share. However, you can also see stocks like Meta, which are up once again more than 100%. So while the vast majority of stocks in the S&P 500 continue to perform very poorly on a year-to-date basis, we do have some of these stocks within the S&P 500 that hold the largest weighting that are keeping the indices up. At this point in time, from a growth perspective, we are seeing sales growth lower on a year-to-date basis than it was last year. Price to sales continues to remain elevated, and dividend yields continue to remain elevated at this point in time. Now, at this point in time, you can also see on a market capitalization breakout that this fund is heavily made up of what are classified as giant or large market capitalization charts. So what I would highlight when we dive over here to the chart, I have this split out on the 3-year fund axes. The reason why I want to showcase that is because at this point in time, or really as of close on Friday, June 2nd, that the market closed at $427.92, almost $428. That is very similar and just above what we saw in March of 2022. The reason I highlight March of 2022 is that is when the first interest rate hike occurred. So at that point in time, we started to see interest rates rising. During that same time frame, we've now seen interest rates go up by more than 500 basis points or 5%. However, the stock market is basically flat to that point in time. I highlight this because there is a significant amount of consumer liquidity that has been drained. You've continued to see debt amounts increase, both from the United States government perspective as well as individual consumers. And we've also seen less liquidity in the market by way of quantitative tightening, despite the fact that the beginning of this year, again back in March, which you can see at this time period, we saw a lot of liquidity enter the market associated with Silicon Valley Bank, First Republic Bank, and a number of others. So at that point in time, you can see a tight correlation where the market has been dropping or pumping higher, despite the fact that on a whole, I would expect there to be quite a bit of liquidity pulled from the market. So the reason that I highlight this is that the market is at the same place that it was in March of 2022, despite the fact that the macro forecast is going to be very, very different. So what I'm going to be watching on a go-forward basis is the debt ceiling deal to see what is going to happen by way of market liquidity. Where is all of that cash going to go? I think that we could see a liquidity suck from the S&P 500 from the stock market into treasuries. And the second thing that I want to watch from a consumer spending perspective is going to be the resumption of student loan payments, which on average is just north of $350 per person on a monthly basis. That is a lot of consumer spending that could be beneficial to the broader economy. The last thing I'll be watching based off of numbers from this past week is that we will be looking at the jobs numbers as those come out here over the course of the next month. to see what that looks like for the month of June. And that is primarily because it looks like job openings are declining and job or unemployment claims are increasing. So we'll be watching this on a go-forward basis, but at this point in time, I wanted to showcase from a macro perspective what I'm looking at. Thanks for watching. Talk to you soon.